Hey, and we're live. I'm Shane Oglow, Roguetrader.academy, and there's my partner Richard eating.
Yeah, I'm still trying to clear the couscous out of my teeth.
We do everything at our desks, like probably most of you do. You know, it's like the full station for life. It's February 29th. You don't get to say that too often.
Huh.
February 29th.
And it's February 29th in the middle of a massive Bitcoin bull run, which you get to say even less often.
Yeah, that's true. That's true. Hey, great to have everyone with us. And once again, if you can't hear me, say something in the chat. Regarding the chat, there's a Q&A section. We're going to have a little brief session at the end of this call, be about 30 minutes for some Q&A. So you can already see some people rolling into the room. Vladimir, Kor, Jandrea, Soren. Great to see everyone today. Wow, what a week. What a week. Woo, baby. Some accounts are doing extraordinarily well. Other ones that were a little bit neglected aren't doing, so we gotta make up for that. But that's okay. It's trading. These things happen. But I've got some kind of exciting news today. And actually, here, let me just, I think I got on the slide here. No, I don't have it on the slide. Well, I'll go through the slide, then I'll talk about the news. So on the agenda, we're going to do, I do have it on the slide. Yes, I do. I forgot I updated it. Current market analysis. We're going to take a look at some charts, just take a look at what's going on, give some general feedback on, price action, all that good stuff. We're going to do some live trading and options book analysis. And what we've done is we've opened up an account specifically for this show, and we're going to do live trading every Thursday, and we're going to go, it's not just necessarily about trading, it's also about the philosophy behind what we're doing and why we're making the decisions. You're going to see the tools and the metrics we use. Some are Deribit tools, some are third-party tools, and how we use those together to make decisions. And, the topic, maybe I jumped the gun a little bit. Maybe the topic would have been better for next week, but that's okay. I think it's still relevant because there's a lot of FOMO. There's a lot of people saying, oh, man, I wish I would have got in. Oh, it's too late now. I don't want to buy it at the high. Well, we don't know it's the high. I mean, it's close to previous highs. It could be 120 grand in July. I don't know, right? So I don't want people to get discouraged thinking that they missed out or, oh, the price is too high. I don't have enough money. Well, we're going to start an account with $5,000 US. We're near all-time highs, and we're just getting in to show you can still make money despite not having a lot of money maybe, and despite the market already have a big move. So we're going to talk about some of those strategies, and that's why that do this. So this is what we're going to do. We're not just going to pile in $5,000 and buy futures or something right now. That's kind of stupid. If we get a 20% pullback, completely happen, right? It's Bitcoin. Anything can happen. So we're going to dive into that stuff. As usual, hey, we're the Rogue Traders from the Roguetrader.academy. You can check us out. We have interactive live trade alerts during the day. We do from discretionary accounts. We have a weekly Ask Me Anything call. A lot of fun. Really enjoy that. We have educational content, courses, and we do daily live streams. So what we're doing with you guys today and every Thursday, we do every day, except yesterday we screwed up. I'm sorry, members. We're going to make up for that today. Normally every day we're doing that stuff, sometimes twice a day, occasionally even on the weekend if it warrants it. But you get to see us trade. And these are longer sessions. Sometimes they're 10 or 15 minutes if not much is going on. Sometimes they're an hour. Rich and I really go deep on these calls. And this is going to be a little reflection of that, what we're doing with everyone today. So without further ado, why don't I'm going to turn this slides off. And I'm going to go ahead and share my screen. Give me just a moment. I don't have dual. I'm at home today because my son is sick. So I'm in the home office. So let me just bring up screen share. And here we are. Okay, great. So what do we got? Well, here's ETH. Man, ETH. Good stuff. And I think there's a ton more. Hey, ETH and Bitcoin are often, move in sympathy. They do have a strong correlation. ETH is going to have its day. ETH is the dog that's going to get to eat pretty soon because, we all know the ETF is coming for it. We all know it. it's nothing. And what's going to do? It's going to double in price, triple. I don't know. Who knows? I wouldn't be surprised to see ETH at 10 grand. Maybe it takes 6 months, maybe it takes a year and a half. I don't know. Who knows? But I wouldn't be surprised. So when we're looking at the, let's just take a look at a daily chart here. I know we can see this big, all-time highs right up here on 4,800 or so. We're in this zone where it previously kind of hit its head on before, so I wouldn't be surprised if we had a bit of a pullback. But if we punch through, this is the next zone before we start getting to new highs, and all bets are off if ETF thing starts to happen, because the inflows are going to start happening. Now we're going to have to do an analysis on that versus who's holding, who's selling, who's mining, the supply, all that type of stuff. But we don't need to get into that now. So it's pretty interesting stuff. Now, if I want to just go back to that 4-hour chart just for a quick second here, and we look at this, let's just say I draw a simple trend line kind of from when it started going up, sort of around here. Well, even if there is a pullback, geez, 31, 32, 3,300. If it really pushed back down to 3 grand, I think those are huge buying opportunities, and I will be jumping all over those types of opportunities. Bitcoin, same thing. It went past my unicorn, for God's sakes. It went past the unicorn. So I don't know. I don't even know where this unicorn needs to go. We're in price discovery mode. We can't go back and say, in 1987, this happened and that happened with this asset. Well, this is totally different. We have an asset with a limited supply. We don't know. Is the price of Bitcoin 5 grand? Is it 500 grand? I don't know. That's what this price discovery is going to find out. And there's not a lot of sellers. There's supply demand issues. So why can't it keep going up? I expect some shenanigans on the way up, but why not, right? So if I zoom out, take a look at the daily chart, same thing, right? We're looking at all-time highs right here. Pretty much the same basics as the ETH chart, but and we can also go ahead and we can draw a very simple trend line from where it took off and say, all right, well, we're going up this way. I don't know. I mean, it pullbacks into the 50s. It went back down to 57, 56, 58. I'm gonna be all over that.
I've got some further thoughts on that if now's the time.
Yeah. Okay.
So it's not just it's a limited supply asset. It's that at the moment, if you take yesterday's inflows into the US ETFs as a benchmark, and it's an arbitrary thing to do, but if you do, that was $500 million.
Mm-hmm.
$500 million at today's price represents about 8,000 Bitcoins per day. And if you assume that nobody else is buying or selling Bitcoins, then today the miners are producing 900 Bitcoin a day. So there's about 9-to-1 ratio of demand versus supply, just purely on a purely supply side economics. So if we assume that Wall Street investors will catch on and keep on allocating a tiny amount of their capital to Bitcoin, and it's, let's say, $500 million a day, then actually before you get price equilibrium, where the supply is matching demand, the price would have to rise to about $550 million. Sorry, I beg your pardon, $550,000. Don't get too excited. Of course, we've got a halving coming up in mid-April, and the supply slashes to 450 a day. And I've had people ask me, what about the Mt. Gox inventory, and what about the Galaxy liquidation, and so on. And I've actually done a spreadsheet and figured that out. And if you assume that those will be fed into the market over a year, then all those do is increase the supply by 10% of Bitcoin. So it's absolutely relevant.
Drop in the bucket.
So our thesis at the moment is that the risk is very much on the upside until there is some macroeconomic event that makes it uncomfortable to allocate 1 or 5% of your money into Bitcoin for fund participants on Wall Street. And we can come into that in later episodes, because that's definitely something we've got to plan for. Our thesis is the upside risk is much more than the downside risk. And actually, you talked about the trend line and all that stuff. And my thesis is that none of that matters anymore.
I agree. I completely agree.
Because at some point, the shorts are going to just get swept, and the order books will be empty. And then we are truly into price discovery. The price will be whatever anyone chooses to sell at.
Yeah. And I don't want to freak anyone out, but there's a danger on the markets of the market makers maybe not being able to maintain an orderly liquid market, or kind of touch and go and making it extremely volatile.
And at its extreme, something we'll touch on later again in a separate episode is I mean, Deribit runs an insurance fund. And that insurance fund currently runs at something like 800 or 900 bitcoins. This is purely in the Bitcoin market, and that's to cover the losses of people who cannot pay if they get liquidated and they can't, their account doesn't cover. Then Deribit will step in with the insurance fund. I can actually foresee, and I've gone from being a Bitcoin skeptic last year of this is bullshit, flash in the pan, to being very concerned that I've been utterly wrong. I'm about to be proved utterly wrong. And for a short period of time, history will be made in the same probably way as cowrie shell bubbles were made, and peppercorn bubbles, and aluminium, and tulips, and pineapples also was another bubble. But nevertheless, these bubbles matter, because if you're not in them, you suddenly find that you're much poorer than all your friends. And if you're in them too long, you find that you're much poorer than all your friends. Right? So
you got to keep up with the Joneses.
So our sort of working thesis is that we ride this baby to $500,000 a Bitcoin, maybe even $1 million, and not get hosed on the way up or on the way down.
Yeah. and when we have specific strategies how we're going to do that. So like we wanted to define some parameters for this account. We haven't done it yet, but I think by next week we will. Richard and I are going to decide, do we want to 10x it? Do we want to do this? Do we want to do that? We want to try to put some parameters on there. Whether we reach it or not, we'll see. But we want to be very as specific as possible, including on how do we want to run the risk super hot all the time and just constantly be fronting margin? Maybe sometimes we do that. Other times we want to back right off, and you'll kind of see all of that. So you know what? Marcus, he says, I'll take 10K ETH, and you sound bullish. And it's funny because you were always the skeptic. And well, I think we were talking before the call, and we were talking about how you used to sell puts in order to accumulate Bitcoin until it plunged below 30K. And you were like, screw this. I don't know. This thing could be worth zero. Hindsight is always 20/20, but it's a different situation we're in now, completely different situation than anything we've ever seen before. So I think we have to be prepared for things that we've never seen before, and just never be surprised by the market. All right, so let's move on. I think what we should do now is so we've got this brand new fresh account that it's been unsoiled by us. It's got some USDC in there. Around 5K-ish. Why don't we share the screen? Why don't we allocate that money so you guys will see the process of how you take the USDC.
Yeah.
Put it in
this is the spot chart on Deribit, and as you can see, since you've been jabbering, you've already lost us $100.
Oh, jeez.
So
gonna have some coffee.
Yeah, and so what I'm talking about here is if we look at the perpetuals market, right? Actually, you know what? Let's convert the money first. And I'm not going to. There's a massive spread here, but you know what? I'm just going to convert it at market.
Yeah, we only got a half hour, Richard.
Yeah, okay.
That's the other thing I'll mention is if you watch our live streams, a lot of times we're waiting for fills. So we're often crossing the market because we don't want people to wait too long. But that's something we're probably going to do on this show too, is where, maybe in other accounts we might wait to get filled on the offer or the bid. When we're doing this, we'll probably just cross the spread just because.
I'm just going to cross, and I'm just trying to find a number that Deribit will accept because unfortunately they don't have a trade max you can do number. So, bam! Oh, come on.
And thank you for the kind words of Vladimir for my son. Yes, he's fine. He's just usual.
All right. Well, let's just do $5,200 and leave $100 lying around.
$100. All right. There's that $100 that I wasted earlier.
Oh yeah.
We'll keep that in reserve.
Well, that'll be $1,000 in 6 months' time.
Unless it goes to 42, then we'll use it to buy some more.
All right. So we are long 0.08 Bitcoins. It doesn't, not too long ago, this would have bought us almost half a Bitcoin, but here it is. And so what our thesis is, so I just want to quickly cover off what I'm talking about here. You see the order ladder, the bids, the buys and sells, right? So everyone here who's selling a put is actually committing to essentially deliver you cash flows against a Bitcoin. And everyone who's buying a perp is essentially looking to deliver cash in order to buy a Bitcoin. And what I want you to imagine happens is if Bitcoin runs up to, say, 65,000 today, 68,000 tomorrow, 75,000 the next day, 80,000 the next day, at some point, the sellers of these perps, on not just on Deribit but on all markets, are going to say, wait a minute, we don't want to commit to here. And even though there are market maker agreements in place, market makers might break the rules and say, you know what, we don't want to sell at 85,000, we want to sell at 90,000 or whatever, or even actually it's going up too fast, just pull the orders. And one day, what I'm concerned happens is that all these orders just get pulled across all the exchanges, because in the end, it's the same bunch of market makers making markets everywhere. And so suddenly there's bids in the market but no offers. At which point, whoever offers a price, that's the price across the world, and you'll see you may see what people call a God candle, where it goes from, say, $75,000 to $150,000 overnight, or even in one tick. At which point, people who are short, a lot of people who are short, are going to get liquidated, and there'll be a call on Bitcoins to be delivered, and then we'll see who's got enough Bitcoins to deliver, and we'll get into delays because of lawsuits and all the rest of it. So what we want to do is profit from that, but also not take so much risk that we ignore the fact that even if we win, it might take a time for us to get paid, and we might not get paid 100 cents on the dollar. Because if we get a God candle from 150 to 600, you can be sure that we're not going to get 100 cents for every dollar that we should be getting, or 100 Bitcoins for every Bitcoin. So we just need to be mindful that we need to be able to weather the downside risks. We might not get as much of the upside as we expect to get, and we need to live to fight another day through the realities of market trading as well as the theoretical gains. So our thesis, I think, Shane, is that we see 45,000 price as a distant memory in Bitcoin. Is that fair?
I think it'll be unlikely it gets there. Anything can happen, but yeah.
And in fact, so I think we even think 55,000 is probably an unlikely scenario from now on. So what I'm proposing, or what I proposed to Shane, is that we actually look to sell some put spreads to fund some calls.
Yeah, we're going to buy some risk reversals. Yep.
We're going to buy risk reversals, but we're going to cover our puts
as a spread. Yeah.
As a spread, because if the market does move down, we want some leeway in terms of margin to be able to manage that. And we also want to do this at a credit, because we actually want to increase the number of Bitcoins on the account.
Yeah. And I think that's our goal. Like sometimes we'll be looking to increase the USDC value, but I think, or US dollar value, but I think that for the most part, we want to accumulate Bitcoins at this point because of our thesis of where, and most people think Bitcoin's going to continue going up, right?
Yeah. And so remember, if you will, that Deribit options are what they call inverse options. They pay in Bitcoin, even though they're quoted in dollars. And that's kind of useful for us, because it means that if we receive premium for selling a put, we're receiving it in Bitcoin, which automatically adds to our dollar delta. So it makes us longer. So even if we break even on the trade, we've put in dollar terms, we've put Bitcoins on the account, which is our aim at the moment. So
one thing I'll quickly mention here is that, a lot of people use a strategy of selling cash secured puts. If in the stock market, they want to accumulate the underlying, they'll sell a put. If they get assigned on that, they're very happy to take possession of that. We're sort of looking at this in the same way. Now, maybe we'll be, the market moving up aggressively. We'll be selling puts fairly close to the money. Then the market reverses. We may choose to roll those puts. Some of those puts we might not roll. We might let them expire even if they're near the money, in the money, and then roll out another one after, or resell that. Again, we're happy to accumulate Bitcoin at certain strikes.
Yep.
Yeah.
So
we only have 10 minutes. So do we want to let's put some trades on right now. So our thesis, let me just sum it up then. So we want to accumulate more Bitcoin. We're starting with a 5K account, brand new. We're at near all-time highs, and we're going to do so right now, starting by buying risk reversals, but the puts are covered. So a risk reversal, if you're buying it, is you're selling a put and you're using the proceeds of that to buy a call. Okay. In this case, though, we're buying a put as well to protect the downside. We want to do this for our credit. We're going to incorporate other strategies. Sometimes we're going to do 1x3s. We'll be selling calls. We'll look to disperse those calls, but we're going to, I think, time the market for those types of things. We're not just going to, every week, sell a 1x3. I think we're going to look at the right time when we feel the market might have exhausted. Let's do a 1x3. Okay. And if those three short calls, so 1x3, buying one call and paying for it by selling three and getting a credit. If we blast up, we've got the strength of the one long call. Those three short calls we're going to disperse into strangles or puts or whatever we're going to do depending on the market condition. So we're going to get into some other strategies in following episodes, but let's just start with buying the risk reversal. So that was kind of long-winded.
Yeah. So here we are. Now, unfortunately, I was hoping to be able to buy a strike higher than $120. This is for the end of March. It's 1 month away. Quite amazing, right? That there's this $120,000 being shown. I actually feel it would be nice if we could buy one at $150,000 because this is 8 delta, and trading at 88 vol, 88%.
Extraordinary.
Sorry, that's 87% away. It's trading at 102 vol.
Yeah, it's like a 2 delta, isn't it?
Sorry, yeah, you're right. Gross delta is 2. Yeah. Okay, that's cool. 2 delta is fine. So I'm happy to buy this. I'm happy to pay 100 volt for this. But how am I going to fund this? Well, if we look at 55 is quite aggressive. Maybe even go lower, right?
So we didn't want to buy something closer to the money in this case. Because a lot of times when we do risk reversals, we'll buy something near the money. Like, and this is what we do on our live stream.
You mean sell, right?
The process.
No, because I think the game here is we want to collect premium because we want the Bitcoin on our book, right? And we also want a outside chance that we make a shed load of money, right? But we don't want to bet the farm. We don't want to bet all this month's gains that we're going to see the God candle this month because we might not. So what I'm saying we do is we sell a put spread that brings us some net income. Yeah. And then with some of that proceeds, we buy the call. So
yes, I just thought we were going to start off buying a call a little closer to the money, but I'm okay with those. Yeah, go ahead.
Yeah, they get expensive fast, and
they do. The skew is ridiculous. Yeah.
And the thing is, this thesis only works if Bitcoin doubles. Within the month. Well, if Bitcoin doubles from here, you'll see at the money vols go up to 80, 90.
Yeah.
And you'll see the wing vols going up to 140, 50 or more.
Yeah, absolutely.
And this 19 will suddenly be worth 300.
Yeah. And one thing I'll just mention for people too is if it doesn't go up, let's just say it farts about in a $5,000 range for until April. We're still collecting a credit.
Yep, that's the point. So we're getting this upside essentially for free. So the question is, what strikes are we happy on the downside, or what are we prepared to stomach being a floor for Bitcoin in the next month?
And the annoying thing is when we look at these strikes on the puts is that they're not worth much. We look at the skew, so it's a little bit. Vols have expanded; they're worth a lot more, but in comparison, I think mid 50s. If we can do mid 50s, I can't quite see the strike.
All right, so 52k is 140 basis points. We could probably get 135. And then 47 to cover it would cost us 60, quite a lot. Okay. So we'd receive a 50 or 60 credit.
Yeah.
And we'd be spending 21 on the call spread.
Let's do it.
Uh,
gentle way to ease into this account.
should we go in maybe at 53 rather than 52?
I'm happy to do 55, but let's do it.
55, screw it. Okay, we'll go at 55. We'll do 0.1. So because we've got roughly 1.1 Bitcoin on our account, and I'm going to be doing this just manually, putting the legs in separately today, and then later on we'll go into using the
combo screen
doofo.
Yeah. Next week we'll definitely set up a trade there so you guys can see how that works. Yeah.
So how about 55, 50?
I think it's
10, so we're taking 10% risk. Yeah. Risking 10% of our Bitcoin. Of course, no one's filling us. And then on the 120, we'll go and we'll buy the
120. It seems so absurd, but especially compared to like the summer, we had the doldrums, and can you imagine we're buying 120 calls? What are you mad?
We all got filled. We got filled on our mids. Nice, very nice. Markets are busy right now.
Yeah.
Okay, so that's it. And so the margin use is 11%.
Yep.
So it's kind of not too bad.
It's fine.
And then we've got our massive upside candle thing in, and we can probably do another little trade. We could probably do this sort of 55, 550 on 1 week as well, just to bring in an extra couple of pips.
I don't know if we get much for 1 week, but let's see what the premiums look like.
I think you'd be surprised, right? 55. You receive 64, and you pay 22. You receive 40 basis points. 40 basis points for a week is what, 11 basis points a day. That's like 50% a year interest.
Yep. Let's do it.
Should we do it?
Yep, let's do it.
So we'll sell that, and then we'll buy that.
All right.
We'll let that stew and fill. We might have to go down to 60 and up to 24.
All right. So today we're almost at the end of our time, so we're not going to get into some of the analytics. And,
you know what? The next time we see everyone is going to be a week's time, right? So screw it. I'll cross the spread.
Okay. What we're going to do?
If I have to emergency trade it in the week, I will. But we'll tell you what we've done.
Yeah.
So what we've done here is we've sold for 60 basis points and we've paid 21 basis points. So we've got net 39 basis points for 7.5 days of risk. 12.5% away from in the market. And the only reason I'm doing this one-sided is because we believe strongly that the market's more likely to go up than down.
Mm-hmm.
And so if I can just show you the wallet, Bitcoin now is you show the P&L. Where's the P&L thing? There
it is.
I wonder if it doesn't record. It doesn't record it on a. Oh, here we go. Yeah, here it is on the right hand side. This is us buying.
Just lift your screen up a bit higher. I think our faces might be in there. There it is. Yeah.
Oh, there. Okay. Account value. So there we are. There's our account value going from 0. Oh yeah, that's money going in. Okay. So I was hoping that we'd see like the little uptick of the premium going on, but of course we've done it all in the same day. But we converted that. In fact, I can look at the transaction log. Sorry, guys. So there's the Bitcoin USD. The end of that, balance was 0.825, and then we bought the outlier. Sold the put, bought the call, bought the cover, sold the our marches are filled as well. So you can see that we started the day with 0.0825 bitcoins. We currently have 0.0838 bitcoins. So we've already added a little bit of Bitcoin to our balance, and we strongly believe that balance will go up in value. And of course, if we're right, then all those puts will go worthless, and that 120k call might go worthless, or there might be a gold candle. We'll see.
Yeah. So one thing I will mention is, next week when we come back, look at the account, we'll see what trades we've done. We're also going to be looking a lot more deeply at the various metrics, Greeks, and some of the tools that we use through one of our partners, Immersive Finance, in conjunction with Deribit's tools to really analyze what's going on, and it helps us in our decision making. Okay, so I've got a couple of quick questions here. One question disappeared. I'm not sure where that went.
I put it into Q&A.
Oh,
Sorry.
okay. Soren asked, can you sell it for something more liquid and cash that?
I think he's talking.
It was much earlier in the call that was posted. So
I forget what we were talking. Sorry, ask us another question with some more detail, because I'm lost as to what I was referring to at the time.
Okay, well, so you can put that in again if you don't mind, and then in the meantime, or Soren, and in the meantime we'll go to Peter's question. Short covered calls on debit position metric number 1. Displayed delta shows the naked value, so the BTC ETH holdings have to manually get factored in. But what about gamma?
Okay, so first of all, the manually factoring you don't have to do. You can just select net delta.
Yep.
And if you look at the settings in the risk, where the hell is it? Net delta. Here we go. So you see we've got a delta of 0.02 and a net delta of 0.02 because we're not in the money, and the Bitcoin value doesn't matter. But what this net delta is doing is it's actually subtracting the delta of the Bitcoin premium represented by the value of the option, which gives you a sort of a true delta if you're thinking in terms of Bitcoin. So your delta is in terms of if you're hedging into dollars, and your net delta is if you're hedging into Bitcoins. At the moment, our account is very similar. What about gamma? I don't think Deribit shows you net gamma. I use a tool, as Shane mentioned, called Immersive Finance, which we'll showcase at some point. And in fact, that firm is owned by a friend of mine. And that allows you to see your risk, your full risk in terms of dollars or in terms of underlying, as you wish, or both, and run various scenarios over it.
And just so people have some context to that, the question was, what are the best strategies, tactics to manage a hedge gamma? So, for example, short call campaign, in my understanding, if delta neutral but leveraged, it's probably gamma that will blow you up on some vol shocks. Any ideas on this?
Yeah, your intuition is correct. Gamma is dangerous. So you can kind of successfully gamma hedge generally just by periodically setting your delta to 0, using the appropriate trades in futures. And I would suggest trading in futures more than perps at the moment, because perps funding is so high, unless you're going south. But actually, the biggest risk in Bitcoin is not gamma, is actually Vega, the sensitivity to vol, particularly if you're short vol. And actually, one of the reasons that we cover this trade here is not actually to limit the loss, because we don't believe in a month of Sundays that Bitcoin's going down below 50k again. Well, until the Fed intervenes and all bets are off, but that's a couple of years away. We do this because actually it controls for gamma. If the market does get down here, people are going to be feeling pressured. They're going to be forced to buy puts back. It's going to be forcing prices up. Vega, and that means implied vol will rise. And I've seen implied vols go from 70 to 300. And you can mentally imagine that's think about that in terms of 4 times the price while being at the money. So it means going from, say, 216 basis points to 666 times 4.
The number of the beast.
And if you're not covered, that gets really unpleasant really fast. If you're covered, you've got at least some protection against the Vega. There's a whole bunch of other Vega hedging stuff you could do. We do a whole thing about that in our courses. But
and another thing too, it's a nice habit to get into for that reason. And also, you're going to see us doing a lot in order to manage margin as we start to really build out this into a book of options. This is just the first steps to get us started. A quick question from Vladimir. Maybe because you're thinking that we are going extreme bullish, that it's reasonable to buy calls and sell higher calls to cover fees and leave some Bitcoin as a profit. Yes. And, that's what I was talking about with those 1x2, 1x3s. Sometimes I'll also sell a put as part of that package in order to finance the purchase of that call. Well, I think what we were saying there at the beginning, Vladimir, is that we're just not going to, we're not going to systematically say, oh, every week we're going to sell a strangler, or every week we're going to do this. If it involves selling calls, because we're very sensitive to upside price shocks. And I think that when we do sell calls, we're going to probably pick and choose our shots when we want to do it.
Yeah. Also, if you're selling, if you're planning to do trades like call spreads and 1x2s and so on, these things rely on markets being orderly, and and saying, okay, look, a 10% up is reasonable, but a 25% up is not reasonable. Therefore, I'll sell 10%, buy the 10% up, and sell the 25% up. But I'm actually I'm not concerned about that. I know people are bullish, but I actually, having done the maths on the flows, what I've become is actually, particularly against the backdrop of the Fed playing funny money, and US. I think the US Treasury needs to sell $17 trillion of treasuries this year to just cover all the deficits and the interest, 7 trillion of its interest. People are losing faith in the US economy, and that might be right or wrong, doesn't matter. People are losing faith in the US economy, so they're looking for alternatives. And we've just had Bitcoin appear in Wall Street, being offered by every CFA in the US, or 80% of them, who are suggesting to their clients that they at least put 1% of their money in Bitcoin, right? So what I'm afraid of is not fast markets going up and me profiting from the spread, but what I'm worried about is actually markets just get disorderly, and we get massive wicks So I actually, one thing we should do here.
Well, we saw a $5,000 candle yesterday, didn't we? Down candle.
Exactly. Yeah, up and down wick, and that's going to become more common, I think. And so I'd be quite comfortable to put in a sell order on this 120,000 at, like, I don't know, 0.5 of a Bitcoin, because who knows, I might get hit. Right?
Yeah, spikes up. Yeah, you might be the only one in the market.
I might be the only one in the market. I might get swept because someone's panicking. And I think it's going to be those kind of markets going. I think it's likely that we see those kind of markets going forward. So I'm extremely careful about calls, and if I do calls, it's got to be an even number, more cover than calls. Yeah. So I'd only be doing calls in a like a funded 1x3 or 1x2 kind of scenario.
And I was going to say, going forward, as we build this book out, it's going to become a full-on book, and strikes are going to get, and expires are going to get filled up with positions. You're going to see other tactics we use to deal with in the money short calls. We're not always just rolling. We've talked about that before. There's other things we can do to hedge those off. So it'll be interesting to watch that develop. And again, if anybody wants to see us do this every day, you can always subscribe to our Patreon and join that live stream, or of course join the Roguetrader Academy. But hey, we went over time. I apologize, but hey, we were setting the account up, first steps, lots to talk. I mean, I guess we always have lots to talk about, to be perfectly honest. But this is going to be a lot of fun. Any questions about this type of stuff, or you have questions you want to talk about for next week? If you have your own strategies that you're trying to deploy and you want to ask us questions about it, why we don't do it, whatever, feel free to ask those types of things. We're always open to ideas, and we've got certain reasons for doing what we're doing. A lot of it is based on back testing and as Richard said, the maths we run and the tools we use on Deribit and Immersive Finance. So I'm going to shut it down. Any last thoughts there, Richard?
Sorry, just one. Soren, you said in case BTC shoots up and you cannot get cashed 100%. Look, I think if we get in a position where Deribit counterparties can't cover all their liabilities 100%, every other exchange is going to be in the same place, and every other asset is going to be in the same place. So I don't think there is anything more liquid than Bitcoin. And Hans, very, very sorry. Yep. We've kind of rushed through because we're trying to get a lot done in our first episode. So next week, please join us again, and we will go through the trades we do much slower because we'll have a lot less to do.
And maybe what we could do, good point there, Hans, on the mouse being hard to follow. I think you can make your mouse bigger. Maybe we'll do that to make it a little bit more visible to see what we're doing. And hopefully that. And again, Hans, you can always check out the replay. This video will be on Deribit's YouTube channel, and it's also going to be on the Roguetrader YouTube channel. And of course, you can watch it and slow it down, stop, zoom in, whatever you need to do to suck it all up so you don't miss anything. All right. Yeah, 10x, guys. Vladimir says, yes, 10x, maybe even 100x. I don't know. We'll see. Let's not get too greedy, jump ahead of ourselves. But I'm super.
It takes a very it's very difficult to retrain your brain to think that
yes,
because it hasn't happened before, you won't see it in the future.
Yeah.
But I actually do feel that we're in uncharted territory. We've never had the last time there was an asset like this that was believed to be limited supply was in 1760 or thereabouts, when a trading ship landed on an island and discovered what we now call cowrie shells, and brought them back to England and sold them. And the rumor got around that there was only one island that had these shells on the beach, and so a massive race business got into play to get out there and harvest as many of these shells as possible and sell them in the London markets, and the prices went 50x, and people went mental for them, just like they're doing for Bitcoin, right? And the only thing is that back then someone else unfortunately discovered another island also covered in shells, and then another one, and then they realized that it wasn't a limited supply, that these things grew all the time. But Bitcoin isn't even like that. It's absolutely limited supply, and so short of interventions from Fed or whatever, I think it's likely that there'll be a uncontrollable feeding frenzy.
Yeah. And one thing I will say this: I've been trained for a long time. Euphoria is more dangerous than fear. So if we're all like, yes, well, you know what? Things might not go like we planned, or it might take a different route there that screws people over. It's like, oh, if this didn't happen, we have to be reasonable. It may not do what we think it's going to do. Maybe 68 will be its high and never go above, but we don't think so just because of the mechanics of the market. And as Andre just mentioned here, he said, I've seen Bitcoin going 20x in a year or two, so it's nothing new to him. Let's just we've got to be reasonable. We've got to be traders. We've got our bias. For us, it's new. We normally never have a market bias. We're usually agnostic about things. And I prefer that. This is an interesting territory for us, which only happens in bubbles. It only happens for short periods of time for certain assets and certain conditions. And this is one of those times. We're still going to be guarded about it. To hear a question or a comment, the fonts are very small. Can they be increased? Yeah, we probably could, but we kind of need to see the entire screen. It would be a little bit tough, I think, for us to go too much bigger. But we'll do our best. Again, you can always watch the replay. Would probably be the best thing. But we'll do our best. We were going way over time, but I don't want to let any questions go unanswered here. Also, what is your buying power? Well, we put how much in there? 5,200, right?
5,300, yeah. But the thing is, Deribit doesn't work in terms of buying power. It works in terms of margin use. So the positions we are holding are consuming a certain amount of margin.
And you can see the margin on the top of the screen in white, right beside the SM. Yeah, right there. Yeah.
So you can see currently we're using 0.0229 of our Bitcoin as maintenance margin. Initial margin. So 0.0179 as our maintenance margin, which represents 21.42% of our equity. So our buying power is currently 5x what we have, if you like.
Okay. All right. I think that's a wrap.
And I just want to reiterate. So we're doing nothing clever here. All we're doing is assuming that Bitcoin's going to go up, or at least not down, and we're looking to just chip away and get a few more Bitcoins out of the market at super low risk. That's all we're trying to do here, right?
And we earned a credit with this first trade. If it does go down, let's say it goes down to 53, and everybody panics. Well, you know what? We're okay with that because we like picking it up with our short strike price.
I'll treat that as us buying Bitcoin at 55 when I could have ordered it at 60.
Yeah.
So happy.
Again, there's a lot of moving parts. You're going to see it all. It's just going to slowly develop as we go through each episode. And I hope there's lots of questions. And again, if you want to join us every day for these chats we have, where we usually go a lot longer and even make some jokes from time to time, please do so. Join us at Roguetrader.academy or check us out on Patreon. That's it for today. Thanks, everyone. It's going to be super exciting. I'm really happy, and I think it's going to be a lot of fun for us. And let's go Bitcoin, right? All right. See you next week. Hey, and thanks for watching this episode of Deribit Live. If you'd like to learn more, talk, and trade along with us, then check out Roguetrader.academy, where we offer an incredibly unique educational and trading experience. There is no other service like this out there, period. Where else can you not only learn, but interact daily with professional, fun traders, with each of us having over 20 years of experience? And for those who just want to watch our daily live stream, you can do so via the links below. So if you want to peek behind the curtains and understand the strategies that we've developed since we started trading options in the 1990s and take your understanding and skills to the next level, then join now and we'll see you on the inside.